So first off, I'd like to wish everybody, have a happy holiday season. And again, thank you so much for being here today. What we're going to do today is, we're going to look at, a process I use for finding better trades, and hopefully this is going to help you a lot in 2025. So it's based on a kind of process that I put together, trading patterns, tools, option strategies that are used. So we'll go through all that. So again, thank you so much for being here, and it's a good way to, start to kick off the new year with this 2025 year trading selection process workshop that I'm going to do here today. So first off, I'd like to say, thanks again for being here. And a little background on myself: I've been actively trading the markets now for, got to pinch myself, for over 40 years. Started my trading career back in the 80s with a company called Coastal Corporation, which was a oil and gas company that had refining and production, just covered everything, pretty much an integrated oil company. And at that time, they had a training program where they would actually bring you in if you got into the program and teach you how to trade products or crude oil. So I was able to get in that program, and it was launched my career, never looked back. So spent about 5 years with not Transworld, but Coastal. Sent me down to the refinery for about 3 months, kind of learned the process of, bringing in oil, refining it, how you make it into gasoline, diesel, then ended up in the shipping department, chartering tankers and the operations. Finally got on the trading desk and ended up out in Singapore for a couple of years, trading crude and products out there. So fantastic experience, in Asia. Ever get a chance, make sure you head on out to Singapore. And then back in the mid 80s, was hired by a company called Transworld Oil. At that time, they were the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. So really exciting to be able to get with that company. I spent 17 years with them, about 16 of that out in Bermuda, which was the corporate headquarters. And it ended up running the international trading desk, out of Bermuda for 10 years. And that's where I, started trading options back in 1987. But anyway, at Transworld, we were just involved in everything, all the different commodities, foreign exchange, heavy into oil and the energies. But just overall, just got a great experience of trading. So hopefully, I can pass on a few things that I learned there. A lot of them, from mistakes we made. But anyway, I hope this helps everybody. And get your notepad out, your beverage, and let's get started. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, in trading, the reality is that as an individual trader, we really have to do a lot, and we have to do it, a lot all alone. So as you probably know, one of the most time-consuming parts and expensive task is to find high probability trades. So, over the years, I gradually combined what I've learned from, when my employer, Transworld, basically paid for everything. So it helped me to, really put together a good trading plan. So what I did was I developed my own kind of research process and resources to use to, to help me, find good trades, see the data I want to follow. And then what I did was I developed my own proprietary technical trading system, or indicators, that I use in my trading. So when at Transworld, Transworld was actually one of the first, big, kind of hedge funds or proprietary trading companies to actually use technical trading. So I learned a lot, just observing what was going on there. So, when I left, then I put together my own trading model, and that's what I've been using pretty much ever since 2010. And then what I've done to enhance that is I've developed my own strategic kind of option guide that I use for selecting the best option strategy to use, when the market, for different market conditions. So all this kind of evolved into a process that finds the best trades and the best option strategies to use based on the market environment we're trading. So that's kind of the basic summary of it. Now, then what I really recognized going back and looking at trades based on, my 4 decades of trading, is that my most profitable and best trades, they all had the same underlying characteristics. So what I did is I defined and these kind of winning trade characteristics, and then I developed a repeatable trading process to identify and find these types of trades based on kind of a 13-step systematic selection process. So what you should do, observe your trades, go back and dissect your winners and your losers, put together, what's working and what's not, and then that's going to really help you to kind of devise or develop your own trading plan. But anyway, here are some steps that you can follow, and hopefully these will help you. Before we get started, let's take a kind of a market review to see where we are and see potentially where we're headed in 2025. So this was an interesting kind of study that I pulled that I thought everybody might be interested in watching or looking at first. But this is the S&P performance following a negative Santa Claus rally. Now, we're not, this is based on statistics going back 5 decades that take into consideration the performance of the S&P from December the 15th to January the 6th. So we're not quite there yet, but right now it's looking like we might have a negative, or not a Santa Claus rally, kind of a negative one. And so what this does, it basically bases this time frame, the 15th to the 6th, that's based on post-tax loss selling. So that's over, and then there's this quiet period that we go through until the end of the year. Now, going back over 50 years, there's been, based on this data, there's been 14 times that we've had a negative Santa Claus rally where it did not go up from the 15th of December to the 6th of Jan. And drawing from these stats, you can see that the following year, here's 2023, then the next year, you can see here's where this is the Santa Claus rally was a negative in this year, 2023, last year, down 0.47%. So you can just see the statistics there. Now, the following year, what happened was if you had that down Santa Claus rally, you can see what happened in the January performance. So this was basically up. So out of these 14 years of a negative Santa Claus rally, you basically had 6 years that, you had a positive performance, about 42%. Now the balance 58%, you had a negative performance going forward. But you can see here, Q1, you had a 10.16% return in 2023. 2022 was actually up 7, 2018 up 13, and up here on the 15th. But the other years you can see were, down years. So, about 58% of the time. So it's kind of, scattered performance, but I thought it was interesting and wanted to point it out. And then you can see for the full year performance. So basically on average, the full year performance over those 14 times was only 6.27%. But we had some great years, last year, et cetera. But anyway, that's everybody talks about Santa Claus rally. So I thought that would be interesting to kind of start off this workshop with that particular stat. Now, the next thing is, I want to show you, here's where it's kind of marked. You can see where we are currently. We are right about here. So this is where it's marked. And now we've got through the 6th of January, we're not quite there. So it really needs to get back up here above this 6,085, which would be about 608 on the S&P for this to be a positive Santa Claus rally, which is, easily achievable, because we, have next week. So that's kind of where we are right now. So that's the old potential Santa Claus rally stats. Now, the next thing is I wanted to show you is this is a really good forecast of all the major kind of Wall Street, gurus and banks and stuff and research companies, their year-end 2025 targets for the S&P. So you can see you've got on the high end, you've got Wells Fargo. Their target for the end of the year is 7,007. So they're looking for, close to 15% return over the course of the year, for 2025, 14.87. Then you can see Deutsche Bank is next. Yardeni Research, 7,000. BMO, Bank of Montreal, Bank of America, 6666. Barclays, JP Morgan, 6,500, Goldman Sachs, 6,500, Morgan Stanley, et cetera. So the median target 6,600 or 8.2%, year on year up move on the S&P. So that's kind of a good kind of basis to kind of look for and kind of get an idea of what some of the big research companies are looking at. So kind of here's where that would be. So the kind of median is right about here, 6,600, which would come in right about here. But here's kind of the low end, 6,400, and the high end right here as far as a forecast where we'll be at the end of 2025. And so you can see where we currently are trading right there. So that's a good kind of reference point to kind of mark where potential is for the upside for 2025. Now, the next thing that I like to do is always kind of, look to see where the money is flowing. So this is kind of a sector rotation kind of map that you can see, and it's very, very helpful to then identify the sectors that to look for specific possible stock trading ideas. So just kind of in summary here, this is going back for the last 5 days. You can see where we are. The last 5 days on the S&P 500, we were up 0.67%. And then you can see where the money was flowing out of was kind of consumer staples, industrials, materials, real estate, utilities. Now, a lot of this had to do with the interest rates. We've been seeing rates, moving higher, and these are more rate-sensitive kind of sectors, especially when you get into materials and real estate. And also, you've had the dollar really pushing higher, which is really having an big impact on materials, and industrials are basically anything priced in dollars. So, you've got the commodities pretty much priced in dollars. So that's a big part of it. Now, one more thing I'd like to point out, though, too, is that when we get into the first quarter, or first half of the year, the first half of the year is also the most inflationary period in the economy, because this is when you're starting to see the commodity prices start to kind of rise, with a lot of demand coming in for the early part of the driving season, and also for manufacturing. So we could see, some demand on the commodity side for that. So we'll look at it. But you can see then for the last 6 months, the money flow or rotation has been really heavy into consumer discretionary. A lot of that has been, Tesla, and we've got Amazon, things like that. And then you can see the communication sector here, had a pretty good run. Financials have had a really good run. And then you can see technology, which has kind of been lagging. A lot of that has to do with the semiconductor sector, which has kind of been stalled out. But you can see then year to date where all the activity was. Really big move in the technology sector, communication services. Again, consumer discretionary is more so technology with Tesla and some of the big guys, Netflix, et cetera. Financials have had a really good, run. Industrial's okay, and technology pretty decent overall. But the big laggers, and these are the ones that can be an area to look at over in 2025. So these could be some really good opportunities to be looking back into energy, which has been really stalled out. Now, when we look at energy, we'll look at some charts here in a minute, but basically there's a really good supply of oil going forward. But, there could be some good opportunities in the kind of service sector, with the drilling and things like that will be going on. But the downstream sector, refining, because they're going to have cheaper feedstocks, so they can have pretty good refining margins. So, things like Valero, et cetera, could be some opportunity. And then healthcare has just been really, crushed. But at some point, this will have to come back, and then you can see materials have been hurt real bad with the dollar, and then real estate. So these are all areas that present potential opportunities going forward, having been, pulled back pretty much and money flowing out. So at some point, the money's going to start rotating back in for value. So that's a good place to kind of be watching. Now, the next thing, I always like to look at seasonality. So a very important part of the markets, and try to always have the seasonality in your favor when you're doing specific trades. But these are seasonality continuation charts. And then you can see, yeah, the tariff situation will be interesting to see how the Trump administration, the art of the deal is, he always pushes hard and then, makes a deal. So we'll see how much of the tariffs actually go into effect. So you can see here, though, when we get into seasonality, you can see we tend to have a cycle high right last week, okay, about December 28th. Right kind of like where we are currently. So then we get a pullback. So wouldn't be surprising if we get a little bit more seasonality pullback this week. So you can see here, this is the 5-year part. And you can see if you go back 27 years, it's been pretty much sideways. So this next week, we could see a sideways to pull down would be kind of the way to interpret the seasonality. And then you tend to get a cycle low right here around the 5th of January. So the end of next week, we could get a seasonally low period, kind of stalled out, pulls down. Let me kind of erase this so you can see it better. So potentially either sideways to down this next week, and then end of next week, we tend to get a decent little seasonal rally back up into the kind of the mid part of January. And then we get a pullback again into towards the end of January. Then we get another, seasonal swing back to the upside going into around the 15th of February. So that's kind of the seasonality. You can see the pattern there for the S&P. And then the NASDAQ is pretty much kind of the same. Here's the NASDAQ 100, pretty much the same here. You can see the seasonality. So, going into this next week, going to be looking for, a sideways to maybe a pullback seasonally. And the markets are, when we look at the charts, which we'll look at next, are kind of showing that to be the case. Okay, so seasonally, a little bit of weakness into next week. And then we get that cycle low end of next week, basically the 5th of Jan, cycle swing back to the upside mid-Jan, pull back again, and then a move to the about the 15th of February. So you can see these cycle swings on the seasonality. Okay. Now we're having a thunderstorm here, so if I do go out, I will try to come back up as fast as I can. Hopefully that's not going to be the case. So that's a look there. And then the other one to look at I wanted to show you is crude. Now crude is typically, you can see the seasonal pattern here. So we typically get that seasonal high that right around Christmas, which is right here, the 26 area right there. So that Christmas rally on crude is typically a seasonal rally there. Then we get a pullback here into the mid part of January, then another seasonal run to the upside seasonally here. As a lot of this has to do with demand of heating oil, and then you start getting into the gasoline season. But you can see the seasonal high here around the January the 25th, right here, actually right here, seasonal low around here, and then another run up into the mid part of February and then March. Okay, so pretty decent seasonal swing, but the kind of, you can see the overall trend actually is to the upside. So within the kind of seasonal potential upside, this is also, like I said earlier, that the first half of the year, you tend to have the most inflationary period of time. So that's going to involve demand for energy, materials, et cetera. So you can see that kind of a seasonal trend up. So this is an area to be kind of watching for potential trades, in 2025 in this kind of sector, which would be the energy. So we'll be kind of focusing on that to see what we can look at there. Now, the next thing I always want to do is what I call top-down market analysis. And so back when I was in running the trading group at Transworld, a big part of our kind of trading would be to do what we call this top-down market analysis. At that time, we really didn't have the technicals and the charts. We do it based on macroeconomics and supply demand. But we'd look at the big global picture. See if the global picture was in a kind of a macro growth environment, or it was everything was moving down, a low demand period, et cetera. And then we develop our trading plan on that. And then we drop down to the long term, to the medium term, for focusing on more, specific detailed trades. But now what I like to do is I'll use what I call the macro trend. I'll use the S&P 500 SPX, the monthly time frame, and that's what I refer to as the macro trend. Now, currently, based on my indicators, which are based on momentum and the moving averages, we are in an uptrend with a positive momentum to the upside. Okay, so that's currently where we are on the big macro picture. And let me pull that up. I'll just pull it up here real quick for you. Okay, so that looks good. Positive macro view right now on the S&P 500. And so you can see here, this is the monthly chart. We've had a fantastic trend back up, especially since, really kind of starting to see where it started bottoming out here back in November of 2022. And then we finally broke above. This is a 21 period moving average. So you can see we've had a really solid trend holding that 21 period moving average. We had the last real test of that was back in October of 2023. You probably remember that low there. And then it's been a really solid trend up. This is the 8 exponential moving average, very, very strong trend. Now we're currently getting some what I call cycle reversals right here. So this is another indication. Typically when we get 3 in a row like this, we tend to get exhaustion on the buy side. So you can see here, last time we had that was back here. See 1, 2, 3 reversals. And so that was then that basically causes what I call buying exhaustion. Okay, you run out of buyers. All right, so when that happens, then this is a good time to be selling credit spreads, taking profits, hedging positions. Now this is the macro, so this is each bar here is 1 month. So then you can see what happened back when we had those 3 reversals. Okay, so that peaked out then in January of 2022, and then we had this pullback, which lasted. We had to 21, and then we broke that. We had a pullback for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, basically almost a full year. Okay, and then started to bottom out. So then look at it sideways. Now, this is the other thing that I look at is, if you follow me, my big thing that I like to follow is momentum for kind of forecasting direction. So you see the cycle reversals, and then we start getting momentum going negative. Okay, so this is macro, very, very long term. And then we went sideways here for almost a year. Okay, just chopping around. But this is a pretty, a pretty good range to trade, 4,000 down to 3,500. Still a lot of things to be done. And then we finally got that big trend up. But as you can see here, we're starting to get that same thing happening, the recycle reversal. So this is a caution sign to be aware of that. And that could line up with what we're seeing maybe happening in the first part of January, perhaps. And so then the next thing is I break it down to the long term. Now, for the long term, I use the weekly. Okay, so just kind of keep it very simple. Now, we are currently in an uptrend as well. I like to base the trend on this 21 and also the 50. Okay, so now let's pull this over now, but the momentum is neutral. You can see cycle 1 right here this is cycle 1. Now, this is a very fast momentum measuring indicator that I use. And now you can see it's 0, so it's negative momentum, but 2 is still positive. This is a longer term momentum. So right now momentum's neutral, but the trend is still up. We're still above that 21. We're still above the 50. So we could pull back into here easily to the 21, which is like 5,800. Could pull all the way down to 5,500, and we're still in this long-term trend based on the moving average trend. But momentum is starting to fade here. So we're running out of momentum, which is also a sign of potential buying exhaustion. So here's a kind of a more detailed look here when I drop this down to the weekly time frame on my indicators. So right now you can see where we are here, and we've had we're getting cycle reversals here. So you can see when we start getting, typically what I've noticed when we get 3, that's when we tend to. Now we can pull back. Like here we had 1 cycle reversal and it pulls back. But when you get a really strong trend up like here, So we had 1, 2, 3. Then finally, that third one is when we finally get exhausted. All right, so we're still, we still could grind a little bit higher here. We've only got 2, but anyway, that's something to be aware of. And we've got negative momentum on cycle 1. 2 is positive, so neutral there, but a positive trend still up based on the moving average, which is kind of what I call kind of automated trend line. So trend is up, but momentum is starting to fade and it's neutral. Now the next time frame is the medium term. Now this is the time frame that we typically will trade. This is what basically our swing trades are based on the daily time frame, the medium term. So we'll base most of the trades that we do at Paracycle Trading that I send out with my alert service are based on the medium to long-term time frames, so the daily, weekly. But you can see then the medium term based on the daily time frame, we've got neutral momentum. You can see cycle 1 is still positive, 2 though is negative, and then our momentum is neutral, and then our trend is we're starting to break here below the 21. We're above the 50, so we're still, basically, kind of really stalling here. So kind of, refer to this as kind of the trend is neutral, trying to decide transition. Are we going to stay positive, or are we going to start to fade? So I'm kind of looking at here, looking for us to probably fade a little bit more into next week. Now we've got 2 days left, and sometimes you'll also see a little bit of window dressing by the portfolio managers, so et cetera. So I think Monday will be a really interesting day to see if what I'll be looking for Monday as a key is to make sure we hold this 50 simple moving average. All right, so you can see we came down to that bounced off of it Friday. So the 50 simple, this green line here. So that's coming in at around 59.40, or about 594 on the SPY. So I think we'll probably hold this. We'll see if we do. And then you can see we closed here below the 21. So I'll be watching that 21 real close. And what we really need to do, if we get another close on Monday below this 21, then I'm looking for this 50 to be tested and potential break of that. All right, so that's going to be how I'll be, setting up our trading plan in the trading room, and for the trades that we'll be doing will be kind of based on that scenario. So let me just kind of show you a little bit better. All right, so see here, this is the 21 right there, that dashed yellow. Now we closed below it, right? But we closed above the 50. So technically, what I'll look for, and we've got no momentum actually is going negative. All right, see that? So what I'll be looking at is the key will be, can it get back above this 21? That's coming in about 599 or so on the S&P SPY. So 599.20, okay? So it really needs to regain that 21. Now, if on Monday it closes again below that level, then I'm looking for a retest of that 50 and probably a break of that 50 and a move lower, okay? So that's gonna be key. All right, so watch that, and then look for, if that doesn't, if we don't close back above the 21, we're gonna retest that 50. All right, so that also kind of lines up with the seasonality, right? So that's another key thing to put into the old calculus. All right, so that's a look there. Now the next thing is, how do you select the best swing trades and setups? And so what I do for that is have another kind of series of things I'll look at. So first I want to look at, what is the kind of market cycle trend? So currently, like I showed you just here a minute ago, is we're neutral, the way I kind of define things based on momentum and the moving averages where we are there. So it's either, you could be in a neutral trend, which that's kind of currently where we are, downtrend, up, sideways, or extended. So you want to be able to define that. Now, when I say extended, here's another thing, just a quick look here. This is, an indicator that we use. These are what we call extreme range bands. They measure average true range. And then you can see when we get here, a normal move could be to that white line, which is a 2 ATR. So you can see here, just if I put this on the daily, we're not extended, okay? So just kind of want to point that out. Now, sometimes we get extended, like right here. See, back here, it's very extended. And there's certain, stocks that get super extended. So just, everybody probably knows MSTR, things like that. You can see here how it got extended, finally pulls back. So these are things that I look at, for our trade setups, just to point that out. So that's what we would call an extended kind of a market condition. The other things then are going to be, what is the actual market condition, as far as volatility and uncertainty. So the markets are always going to be in a period of uncertainty. There's always something going on. There's always something behind the scenes that we don't know that could poke out. So we're always questioning things. So are we in a period of very high uncertainty, low, or extended? So right now, the way I define it, look at it, we're low uncertainty, nothing too major, high or extreme. Okay, but that can change pretty fast. But right now we're kind of, in a good, low uncertainty environment. And then the next thing is your relative strength of, stocks and the sectors you're looking at. What are those specific? Are they overbought, oversold, extended, things like that? So you want to be able to quantify that. And then the next thing I look at, very, very big part of my trading decisions and trades that I send out and do, are based on what I call selective chart patterns. And there are 5 that I use. So these are 5 kind of really high probability chart patterns that I like to identify. And then when I see these specific chart patterns, it tells me what kind of trade setup to do, and then what option strategy to apply to that specific kind of chart pattern. And then what's your time horizon? What is your trade duration? Are you looking for trades that are going to be, swing trades, from 1 to 2 weeks to maybe 3, or longer term, 6 months to a year, or very, very long-term duration, or just, intraday. So you want to, define what is your time horizon or your trade duration that you're looking to trade. So these are things that, should go into your calculus of what your plan is. So first, let's take a look at the, steps 1 through 5. And this will help to identify market cycles, market conditions, validate the stock's relative strength, and then the duration time horizon. So first off, let's identify the market cycle. So based on my indicators that are going to be combining the moving averages and our momentum, we're kind of in a neutral position right now based on the S&P. So we're using the S&P 500 as kind of the reference index. So neutral on that. So we could be up, down, sideways, extended, right now neutral, okay? So this market is transitioning. We could continue on with the trade to the upside, or we may start to be looking for a breakdown. All right, so for this, I use 4 major primary moving averages. And so the moving averages that I use are the 8-period exponential moving average. So these are fast moving averages, weighted more for current price than past. And then the 21. So these are the 2 kind of key moving averages that I use, the exponential there, and then the 50-period simple moving average, and the 200-day or 200-period moving average. So these are very important moving averages to use. And then what is your market condition? Again, quantify the degree of market uncertainty. So right now, kind of in a low uncertainty period. So this can be based on, and change quickly based on things like the non-farm payroll, major political events. We just had an election. We had a lot of uncertainty there, earnings coming up, extreme situations, war, economic crisis, the pandemic, that was extreme, right? So these are very important things to be aware of. And then the next thing is momentum. This is a real key to, my trades that I'll look at and set up. So trading any type of market environment is going to all be about price direction, timing, and then managing your risk. But then one of the best trading tools for signaling price direction and market timing is based on momentum flows. So these are how my indicators are kind of designed, around momentum flows. Now, momentum indicators, what they do is they measure price strength or weakness. And then when measured across multiple time frames, this is what really helps to create a dynamic trend following indicator that you can use. So this is going to help to identify, based on the momentum, flows up or down, new price trends happening earlier. You can see these things coming based on momentum, price starting to exhaust, things like that. but it also will help to validate the trend strength or weakness. So when you have multiple time frames that are showing really good momentum or low momentum, that's going to help you to define the strength or weakness of a market. And then that is going to help you to stay with a trend longer to maximize your profits. All right, so these are really important. Now the next thing is the chart patterns. So we'll go through those and I'll show you how those work. Now, before I go much further, in case you have to take off for your chores or whatever you have to do, I've got a special going on here right now. Let me show you what it is. And if you go and you use this link, let me put it in for you, you're going to get, I'm doing my alert service. I'm doing a real special end of the year special here, where you're going to get 20% off the cost of my alert service, and you're going to also get it for 6 months. So if you'd like to take advantage of this, use this link here. It's right here, powercycletrading.com up here /special. All right, so what you're going to get is 6 months my alerts. I have 5 different alert services that I send out. So 5 different trade setup alerts that I send out, and you're going to get those for the next 6 months plus 6 months to my trading club, which we'll go through what all that involves, and what you get there. Now the price is $690, for 6 months, but I'm giving the 20% off discount, which will be $552, and there's a 2-pay if you don't want it in 2 payments. So to get that, just put in small cap alert 20. Okay, so use that link that I just gave you, and then put in alert 20. Use that. That'll be the code. Okay, and then that will give you the 20% off. So let's click here, make sure it's working here. I'm going to click on that link, and it should pull the payment link up for you. And then we'll take a look here at that. Here we go. Yep, working good. So pull that up, click on it, or put in there PowerCycle Trading /special, and then you'll see this payment link page, and put in then alert 20. So you'll come down here and it'll show you everything you will get. Here's just kind of a quick summary of the alert service that you'll get here if you sign up today. So this is going back when I first started my first alerts that were going out. This was back in May of 2018. So we've been sending alerts out since the 2018, and then through yesterday we've had we've had 815 trades closed, 586 winners, 54 break even, 175 losers. Really high win rate, 79% winners. Now these are unaudited. These are just a summary of the trades. All right, so that's a quick summary there. Now you'll get, with the alert service, you will get 5 different types of alerts that I send out. I'll talk about this and go through what those are in a little bit, for the next 6 months, plus the trading club, which gives you access to my trading room and a lot of other different nice benefits, and we'll go through that. But this will be 6 months. Now you can start and stop this when you want as well. So you don't start it today. If you want to start it next week, you can. But once you start it, you can also stop it, so you're not using your time, if you go on vacation or a business trip or whatever. So you can start and stop it when you want, but you'll have it for 6 months. And you're going to get this for a discount of 20% off. So it's a great deal. Plus it's 20 for 6 months, and it's like $3 a day. So you're going to get access to all these alerts that I send out, which would be, if I can get this to scroll down 1 second. Let me put this together for you. All right, so you can scroll down, you can kind of see here, it kind of gives you a summary of the 5 alerts. So I send out either calendar diagonals. We do a lot of those, butterflies, long condors, breakout reversal trades. These are typically debit spread, credit spreads, and then the butterflies, calendars for pinning and selective earnings trades. The profit loss, we'll go through that. I'll show you here in a bit what the profit loss looks like on these trades. All right, so that's what you'll get. Now, typically it'll be 8 to 12 stocks or ETFs per month, okay? And then we'll send a text alert, email alert. I'll go through more detail here in a minute, but just kind of wanted to give you this real quick, okay? So if you're interested, before you take off, if you do have to take off early, This is, what I'm presenting here for everybody here today. And we'll talk more about this here in a bit. But the enrollment price, the regular price, if I did it for 6 months, which typically I only do my alerts for 4 months, okay? So I'm adding another 2 months there as kind of a special end of the year. Plus that would be $690, but you're gonna get 20% off. So it's $552. So just click here on that buy link right there. You'll see a kind of summary of what you're gonna get. And there's also to pay if you want. This thing's moving very slow. Okay, so to pay, and then put in alert small cap 20. So you can see right here, 690. Now come down here to where it says promo code and make sure it's small cap alert. Let me spell that right. 20. There's also to pay if you want, and then hit apply. Boom, 552. Now, also, if you want my indicators that I use, this is a 5-study set indicator. These are the model. You can add that to your card as well, $195, and you're actually going to get a discount off that. So really great deal overall. So 552. This comes out, if you break it down, like $3.06 a day. So hopefully you'll get a great deal here today. So take advantage of it. Let me click out of this real quick. All right. So that's, wanted to show you that before we move on. And we'll get into more detail on here in a bit. All right. So that's for everybody here. So yeah, here it is again. Barbara, make sure you use this link, powercycletrading.com/special. All right. You can just click on that and then use that promo code LORCAP alert 20, okay, 20% off. So really good deal on that. So why do I use simple moving average versus exponential? So what I like to do for tracking trend is there's certain key moving averages that that hedge funds, trading systems, algos look at. And so they're based on exponential moving average and simple. So simple moving averages weighs every data point the same, right? So that's kind of a smooth moving average. So there are key moving averages that track trend on that. And then exponentials move faster. So typically a lot of times when you have an exponential moving average, which is fast crossing a simple, that is an indication of a trend shift. So those are key kind of moving averages that are really helpful for tracking trend and breaking trend. Okay, so now the next thing that I look at are patterns, chart patterns. And so these are based on 5 specific patterns that I've identified and put together over all the years I've been trading. These are kind of what I've pieced together that I look for. So one of the major ones that we look for is what we call the volatility squeeze or volatility compression squeeze breakout pattern. Now, this is a pattern that if I see this specific squeeze pattern, which is a tight consolidation period, that's the one I typically will go to. So you get a big squeeze, boom, breaks up or down, right? You get a fast move. Now with this pattern, this can also be in these other 4. So I look at, are we looking at a cycle high reversal type pattern or a cycle low reversal pattern? Or we could be looking at a cycle low retracement reversal or cycle high retracement reversal. So when I see these specific patterns, this will give me a good guide as to, okay, what kind of trade setup should I do and what kind of option strategy would I use for these specific patterns, okay? So it really helps me to put together, the option strategy that I want to use. So here's kind of a review and what these patterns look like. So this is the volatility squeeze breakout. Now what this is again is basically it's a compression squeeze. So it's when we've had a period of price consolidation where price is kind of coiling in a tight pattern and then has an explosive breakout either up or down. So markets a lot of times you'll see they'll have a big spike up or maybe big spike down. Then they'll consolidate. They've lost, they expended a lot of energy, so then they have to go through kind of a regaining energy, you could think about it. So they consolidate and they're just churning, but then eventually they break back out. So a lot of times you'll see a trend where you'll have a break up, go sideways, break up, stair step. We'll keep trending up, or you could get a breakup and then finally a breakdown. All right, so these are very key pattern. All right, so when I see this, with multiple time frames in this squeeze pattern, then this can really lead to some very explosive and strong breakouts, kind of like a chain reaction. So I kind of call it a lightning in a bottle. So it's one of these kind of trades that you want to kind of bottle up and look for every time. So I'm always looking for this compression squeeze pattern. So this, kind of chain reaction can start from a lower time frame, like a 30-minute, hit the 60-minute, hit the 4-hour, and then daily, et cetera. It could kind of create a big, trend shift, kind of tsunami. So it's a great place to be looking for, kind of an igniting type of momentum. And so this is a fantastic pattern to look for swing trades and day trades, giving you a really big, what I call that timing edge, because the quicker you can get in and out of a trade with a profit, the less risk you have. So time equals risk when you're trading, right? So when we get in and out of a trade, that can alleviate risk. And so this is a great pattern because it's so fast and explosive. So here's just an indication of what it looks like. You can see this was on Netflix. This was just a series of some great squeezes. And so with my indicators, which again, if you do want to add this to your cart, you can. And as you saw, those are offering to 195 plus you get that discount. So I probably should have taken that off, but it got put in there anyway. So you can see the squeeze. And so my indicators will identify this, and they'll show you these dots, these color-coded dots. So you can see here's kind of magenta and then green. These are kind of linked to cycle 1, which is my momentum indicator, fast momentum indicator. So here, see how tight that compression squeeze is? See the dots here? So it's just churning. And then finally, see momentum, cycle 1 is positive, 2 is positive. So first we have cycle reversal. Then we had cycle 1, fast momentum, 2, momentum confirming, and then let breakout, boom, out of that squeeze. So I see that pattern. I'm really focused in on it. A lot of our best trades are coming from that pattern. Then it pulls back again, see momentum starts to shift back, pulls back again. We get another squeeze right here. See that squeeze? Then look at momentum. We had a cycle reversal, cycle 1, 2 positive, boom, another breakout to the upside. And then we had another, look at here, see some momentum starts to pull back, exhaustion, pulls back, another squeeze here, and then look, momentum, cycle reversal, momentum, boom. All right, so that's a fantastic pattern that I'm constantly looking for and scanning for. Now with this pattern, then, we'll use either kind of a debit spread here, long condors, or calendar diagonal. So that helps me to identify, okay, what option strategy should I use? Here's just another, look at what a volatility squeeze looks like. This was on Skyworks. So this one was a 4-hour with a daily squeeze. See the squeeze here, see the dots? So these dots are green, that's indicating momentum is positive, and then it breaks that range there and explodes hard to the upside. See it right here? Breaks this range, consolidating, momentum staying up. So we're looking for a break to the upside, and it broke. Now, sometimes they can be huge, sometimes they might not be too much, but when you have multiple time frames, they tend to be more powerful type breakout trades. So that's a squeeze. Now, the other pattern would be a cycle low reversal. So this is where you get a big hard move down, and this is where you're moving below all the key moving averages and just really trending hard to the downside. So here's just an example on the S&P. You can see we broke down. You can see we're getting cycle reversal here. Momentum's negative and just got a huge sell-off. So these are extreme range bands. And so this is an 8 exponential moving average. You can see it just goes up here, fails, comes down, just churning down. But then we get the cycle low. We get all the way down here. First thing is we get the cycle low reversal. Then we get momentum, cycle 1, and then we get confirming momentum here, and then we have a trend shift back up. So for this type pattern, then I like to look for either maybe a debit spread. I could do a butterfly, long condor, counter diagonals. All right, so that's what that looks like, a cycle low reversal. Next pattern, just to kind of give you an idea, cycle low retracement reversal. This is where you get a retracement from, you're in an uptrend and you retrace back to a key moving average. So in this situation, this was actually a weekly gold chart. You can see we were, above that 200-week moving average, that line there, and then it starts to churn. That's also a volatility squeeze on the weekly. And then here's the daily. We had a daily squeeze along with a low here into the 200 period. So then we had that explosive move up. So great for debit spread setups, butterflies, condors, long condors, not to be confused with an iron condor and calendar diagonal. So these are the types of trades that we do and that I send out to the alert members, which you have, just access to if you want to with that 20% discount. And then this is a cycle high reversal. This is when you come in to, you're above all the key moving averages, and then you have the market fades. You start getting, buying exhaustion, and you get a pullback. So this is kind of what we're looking at potentially right now. All right, so you can see a cycle reversal here, right there, and then we get momentum. See the momentum start shifting negative, and then we get that pullback. So that's a cycle high reversal. These are great for call credit spreads. So we get the reversal, we'll start. So we may do, I'm thinking we may want to do a bear call credit spread this week, or we might do put debit spread, butterflies, condors, things like that. So those are some of the keys. There are different option strategies, basically using puts to do those types. And then we have the other one, which is your cycle high retracement reversal. So this is where we're in a big uptrend to the upside, but we run into overhead key major moving average, and then we fail retrace off of that. So here was a really good example on XLK, which was the ETF, the technology ETF. You can see it had been in a strong uptrend, and then it got here to this 200-day moving average. That smooth line, that blue, that's a key moving average that so many systems look at. And then look, here's 3 cycle reversals, just what we're looking at, kind of like right now. And then you can see momentum goes negative, we get a pullback. All right, so with that, could be looking at put debit spreads, butterflies, using puts, long condor, calendar, put calendar diagonal. So those are the kind of a summary review, of the patterns that I like to look for. Now, the next thing is then, well, how do you find the trade? So, I have a scanning process. I look at a couple different scans that I use, and these really help to, spot the breakout and reversal kind of trade setups, what I call before the herd. So you can get in and then, once the herd gets in, man, then it starts to really move. And so I use a couple of different screen scanners. This is one that I use based on my volatility squeeze indicator. Okay, so this scanner is programmed with the volatility squeeze that I use, the code that I use to identify a squeeze. So you can see a lot of these different ones. So what it does, it gives me a matrix I can use any time frame, but this is a daily squeeze, SQD, and then TDD. This is anything that's maybe broken out of a squeeze. Here's a 4-hour squeeze or a weekly. I can, with this screen, I can do from 1 minute all the way up to a month. I can look for squeezes, but typically I'm looking for, swing trades. So I'm typically looking at anything in a squeeze on a daily and the 4-hour. These 2 time frames give me a lot of things to look at. So that's kind of what that looks like. So currently, we'll go, if we have time, we'll go through and look for a couple here a little bit later. So here I can just pull, this is my custom screen here. So this is kind of everything I follow. So just a quick look here, you've got a squeeze going on with GEV, Honeywell, a lot of things. When we have time, I'll come back and we'll flip through a few of those. But that's where I find a lot of the trades that I send out. All right, so then the next thing, step 10 through 13, is the trade setup. And so this is, the trades that I send out are basically using options, okay? Now, when I send out the trade, a lot of my alert members, they'll just do their own thing a lot of time. They may just buy calls or puts, or they may, do stock. It depends on what they want. But when I send out a trade, I always give a option spread strategy, okay? So they're very low defined, high return type of trade setup. So I'm looking always at risk first and trying to give very low risk trade setups to members. But then obviously you can do whatever you want. A lot of members just want to get the trades that I send out. All right, so here's kind of a review of the open to close alert service. Okay, so this is what you'd get right here if you use, John, here, use this link, and here's where you get access to the alert service using that special link, and then alert 20 small cap. Okay, where does the screen come from? So the screen I use is, I'm using Thinkorswim, but you can buy the scanner. If you want any of my indicators, the other thing I was going to point out, I forgot to point out, is that I'm also having a Christmas special. So if you do want to get any of my indicators or any of my courses, you can go here. Here's my homepage, powercycletrading.com. And you'll see here it says holiday sale. If you want anything on if you're a member, you're going to get 60% off. And actually right now I'm having a special for my members that you get 64% off. But if you don't want to buy a course or anything here, if you do sign up today for the alert service, you become a member, right? So if you do that, then you're going to get right now 64% off of anything I have on my website. So if you go here, my trading software, things like this, the scanner that I'm showing you right now, you can buy the scanner. It's my volatility breakout scanner. You can get this if you want it right now for 50% discount. All right, you just go here, and if you use that promo code right here, save 50. If you're not a member, if you want to buy this scanner, you can go here, hit cart, add to cart, and go down here and put save 50. And you can get this scanner for 198 bucks. Now, but just to point out, if you want even more of a discount, if you do buy the alert service today, you become a member, and rather than 50 for right now, you're going to get 64% off. Okay, so you'll get 64% off if you do the alert service membership here today. And then you can, anything on my website, as long as the special lasts. So you can go here, trading courses, and you just get, everything's pretty much option related, synthetic options, just, everything. I covered all. All right, so just kind of wanted to point that out. So a lot of good stuff going on, before the end of the year. So if you'd like to take advantage of that, just wanted to point that out. All right, so the goal then to trading is to have more winning trades than losing trades, since it's impossible to have all winners. Now, you could say, okay, well, I could have one big, huge winner that makes my whole year and have the others losers. So that's potential. But I like to keep a really, strong equity curve where you don't have a lot of drawdown. So I'm looking for winning trades. So with this kind of reality in mind, the performance to date of the trade setups that I've sent out through the service have been actually, I think, very remarkable. So again, here's kind of a summary, and then I'm going to go through all the different kind of trade alerts and the chart patterns and the option strategies that I sent out. Okay, so again, we've had since the inception here back in May 2018, basically 79% winning trades we maintained. So again, unaudited. So, 815 closed out, 586 winners, 54 break even, 175 losers. So get those winning trades. And so the way I look at it is you chip away, and then every now and then you hit the home run. So we want to keep our equity curve nice and smooth. And so this kind of is the way I kind of try to pick and choose the trades. Now, when I send out a trade, we use a service called Telegram. So it's a free service. So we'll send you, information how to set that up. And then when I send out a trade, you'll have access through Telegram. And or if you do want it by email, we will do that too. But you can see here's one that we did just a week ago. This was on NVIDIA. So the 23rd of December, it says new NVIDIA long trading around 136.90 daily cycle low reversal. This is one of those patterns that I just showed you off the 150 simple moving average, plus it had a daily positive momentum. etc. So we did this, and then I put in the target one, I'll put targets in, target two. So this trade was, we went out and we bought a counter diagonal, okay? So it tells you exactly how to do it, et cetera, et cetera. I'm constantly giving updates, any adjustments that we need. So that's what we call, that's Telegram. So it's sent out with this service. So here are some trades that I want to go through and then kind of give you an idea of what you're going to get with the service. Now, again, remember, a lot of members, they just want the trades, okay? But when I send it out, I will always give you an option spread trade with, the option series to use, how to do it, and then constantly updating. Now, these are calendar and calendar diagonals. So we do a lot of these just because the way the trade works. So, but anyway, that's the other thing. When you do if you do the alert service, you're going to learn how to do these trades. All right, so I started this back in June 2019, and we've had 317 trades closed out, 229 winners, 18 break even, 70 losers, 78% win rate. We do a lot of these unaudited. All right, so that's the kind of a summary result there. Here's one that we just did. This was on NVIDIA. This is one I just showed you. So we did this on the 23rd, Christmas Eve. NVIDIA was trading at 136.90 and did adjustment that same day because the way we had it set up, if you understand counter diagonals, we had our short strike a little bit too close, so we adjusted that up. And then that was when it was trading at 142.70. Now we went ahead and took profit on the 24th, and the next day we had actually hit our break even, so we got out of the balance of trade. But here's what the trade ended up making here. So we ended up sending out alerts, so we were out. Depends on when you got out, but here was at 141.80. So this was up $143 per spread, or 164% return. Yeah, we'll do spreads on SPX. And the question is why or why not? Because I find so many other really good trades. You could just specifically do SPX. When I do SPX, it's typically credit spreads, but what I like to focus on are really good stocks that are moving. NVIDIA, Apple, whatever's moving and giving us good opportunity. All right, because SPX, I mean, to be honest with you, it gets boring to me. I like to change things up. All right, so we'll do either ETFs, which could be SPY, and a lot of my members, they don't, they're smaller accounts, so they're not going to want to do SPX, which is basically like 10 times SPY. So we might do SPY, we might do the ETF, we might do a calendar diagonal on SPY, QQQ, the Russell, things like that. But SPX we'll do occasionally with credit spreads. So here's the NVIDIA trade. You can see it really detailed, when to put it on, how to do it, okay? And then that same day, it was trading up here higher. So did this adjustment here. I won't go through too much detail here, but we did adjustment and rolled the short spread up, or strike up to 144. And then here it was the 24th. Actually, we did this was the 23rd, and the 24th was Christmas Eve. This was a really short trade. I was hoping we'd stay in this longer, but you can see NVIDIA pulled back. So it was trading then around 140.75. So you can see it went from 136.90 to 140.75. So a lot of members just bought calls. But here's the spread. So the spread broke out. Now the spread was up $110 per spread, 26% return. And then later in the day, it was up 141.80, was up $145 per spread, okay? So that's a kind of NVIDIA. And then here's kind of what the chart was. We, again, using the indicators is kind of what I based the trade on. We had you can see the 4-hour time frame right here. We had a cycle reversal, positive momentum. See, here's that momentum coming in right there. And so we were breaking this Fibonacci level right here. See that 382, very important level. Positive momentum, cycle reversal, jumped in the trade right there. Then we had a big spike up here. We went ahead and took a lot of profit there. I sent out an alert to take some profit. And the next day, we hit our break even. I wanted to keep a tight rein on the trade, hit our break even, and close out the trade. And then you can see it pulls back. But we're looking at, we may get back into it next week and maybe using what I call a call condor. So here's the trade, did the adjustment, and here's what it looked like going out. This is a call calendar diagonal that we adjusted into. So here we're long. The trade was set up at 136.90 and closed it out when it was trading at 142.70. So we had a really nice move to the upside. You can see this is what a calendar diagonal. So long the 3JM 137, short the 27.144. Okay. Spread entry $4.13 or $413. This went out to 553. That's where got out. 553 less your cost, 740 per spread, 34% return. Now we were hoping for a bigger move, which could have turned into a much bigger return, but that was one that we just did. Here are a couple others to show you what they look like. Here's a really good one that we did on the ETF, the XLV, which was the healthcare ETF. All right, so yeah, here, Barbara, if you'd like to sign up for the alerts, use this link here again, and you can get 6 months at the 20% off if you use alert 20. All right, so these are the kind of trades that you'll be, receiving. And then you can do your own thing, or you can follow the trade setups that I sent out, or the option strategy I sent out. So here was a really great trade that we did on XLV, so the ETF. And so when we did this trade, it was on the 10th of December. XLV with the healthcare ETF was trading at 144.10. And then it dropped down the next day on the 11th. And we adjusted this to a put debit spread. Okay, so a lot of times I'm looking at the market, looking at, okay, how can I enhance the trade, either by adjusting it to, a different type of spread, or to help reduce the capital at risk, or also increase my theta. So I'm always looking at theta and the capital at risk and trying to enhance that by reducing risk, which increases the potential return. So you can see here it says new XLV short trading around 144.10. Again, here's that pattern: cycle high, retracement reversal up to 21 exponential moving average and 200 daily moving average, negative momentum, and a downside momentum cross is another indicator I look at on the daily. So then target 1, we were looking for 143, target 2 to 142. The trade sent out was to buy a calendar diagonal. That's a diagonal. The 20 December, 13 December, 144, 143 put, just a dollar wide put calendar at, look at the risk, 75 bucks. Very low risk trade. Somebody asked for the kind of profit loss. So here's your potential. Your max loss on that would be 75, but we use stops, so you would never lose typically 75 in that example. And then we did an adjustment here on the 11th, right here. Okay, it was trading down at 142.70 right there. So send out this, it says if you're long that spread, adjusting, then it shows you how to do the adjustment: buy to close the 13 D's 143 put, 2 sell to open the 20 D's 141. That should have been, that's a weird put. Okay, so adjusted trade then was long 144 put, short the 20 D's 141. So long the 144, short the 141, excuse me. And then here was the exit right here, December the 13th. If adjusted, that trade currently up $143 a spread, or 164% return, starting to bounce back up, so sent out to take some profits. I'm always constantly updating the trades, just kind of telling you where they are or what you need to maybe do. And so here's what that trade looked like. Again, the indicators, everything that I showed you, the cycle, here's your retracement reversal. See it going up to this 200 period moving average. See it fade there, and then look, it moves up to the 21 and stalls there. So here was the trade, and it was breaking a key support right there. So that's what I call my price trigger. Momentum was negative. So boom, we went short. That was the trade sent out. And then, here it broke down, was down, trading down to 140.59. All right, so that's what everything looked like there. And then you can see here was the original trade. We were trading here, and then adjusted it. After the adjustment, we're into the trade. We're now long that 20 December 144 and short the 13 December 143. Cost of the trade was 70 bucks. So it was trading at 102. So the spread was up 31.50 at that time, but then we did an adjustment and made the trade better because it was moving lower. We kind of captured some big profits, so we adjusted this into what we call a long put debit spread. All right, so here's just enhancing the trade. So took that original trade and then ended up adjusting this to being long the 144 put and then short the 141 put in the December timeframe. All right, so put debit spread. Our adjusted cost now is $87 per spread right here. And then our potential profit, we've got a $3 wide or $300 wide spread, less 87, potential to make $213 per spread or 244% return. All right, so that's what we adjusted into, and then here's where it went out. We ended up, send out alerts, take profit. So when we get into these trades, I'm always, like I said, adjusting or sending out alerts. Okay, maybe take some profit here, hold the balance, put a break-even stop. I'm just telling you kind of how to manage the trade with the alerts. And so on the 13th, now it was trading at 140.62, and the spread was up $143 per spread. That's 164% return on that risk of 87. You can see it right there. All right, so it's trading right here. So that was one that we just did recently, not too far back. And then here's just one more. This was on gold, GLD. So this was a long call counter diagonal that we entered on the 19th of November. It was trading at 242.98. Did an adjustment on the 21st when it was trading at 246.48. You see, it had a big move up, and then had a profit take on the 22nd. Now it was trading at 250.32. It's up, based on the adjustment, everything $362 per spread or 348% return. So I won't go through all that, but that's kind of the trade that we just did. This was back in November. And so here was the trade setup. You can see based on the indicators and everything. So we had again, a cycle reversal that I looked for. We had momentum starting to go positive here. So we did the trade. We bought into it right there. And then we had this pretty good move up and then started the exit right there. So going into that 618 Fibonacci level there. So profit on that 22nd is trading at 250.32, up 362 per spread, 348% return. But again, like I said, just to point out, a lot of members just do their own thing. They may have just bought calls or they could have bought shares, but I always will give you an option spread if you want to take advantage of that. So that's what that looked like. You can see here is on the 21st. Here was the kind of the alert sent out here, based on the 21st. It was talking about trading around 246.62 if long. That spread currently up around $136 per spread or 77% return. If long multiple contracts, make sure to lock in some profit and hold balance. Okay, we'll update. So here it was on that 21st, trading at 246.66. That spread was right there. So this went from 175 to 311, so up 136. But then we did an adjustment to make it even better. Okay, so that's trying to enhance the trade. So now on the 22nd, we did an adjusted trade. Now it said adjusted long, so trading at 250.32. If long the adjusted, we did this adjustment earlier, the 245 short the 27.252. We rolled the spread up, so now you can see we're long that 245 short the 252. So we rolled the whole spread up, and now the spread went from we were into this as a debit spread. So our adjusted cost was 104 and the spread had blown out to 466. All right, so we were up $362 per spread or 348% return. So based on that adjusted cost of 104. All right, so just kind of giving you a kind of summary view of all the different types of trades that that you would potentially, receive through the service. So those are a few counter diagonals. Now, depending on what the market is showing us, that's when I'll do the different trades. So it may be, one day we might, hey, this is better for a butterfly or a condor, or hey, no, let's do a calendar. So these are just a, kind of a review there. Now here are a bunch that we do butterflies and long condors. So this started this part of the service back back in 2019. And so through Friday, we've had 198 trades closed out, 141 winners, 14 break even, 43 losers, so 8% win rate. Somebody asked me about the average profit loss. Now, of all the different types of option spreads that are sent out, these will have the highest return on risk, okay, because of the butterfly spread, how it works. So typically your potential loss would be no more than $75 per spread is kind of how it kind of works out. But the potential profit on these things can be huge, either 2 to 1 or sometimes even 25 to 1, okay? And I'll show you how that works on a butterfly. All right, so these are really cool trades. So these are others that might be sent out. Again, all these depend on the chart pattern and what the condition is. So here's one that we did not too long ago on Apple, the long call condor. So this is one that was done on the 21st, and Apple is trading at 228.80. And then we had profit on the 29th. It was trading at 235.74. So again, to point out, a lot of members just, they'll just buy calls, but I always give you a spread if you want to use it, because I want to keep my risk super low and give your potential for a big high return on that low risk. So here's what it looked like when it was sent out. It says new Apple long, trading at 228.80, holding support at the daily 50 simple moving average, daily positive momentum, upside cross, target 1, 232, target 2, 234. Buy this condor at around $85. And then sent out another alert here on the 29th. And then, here it was on the 29th, trading at 237.32. If long, the call condor here says early close, trading in the money, the call spread. Make sure to take profit, close trade out. Currently up $168 per spread, or 204% return. All right, so that was what was sent out there. So just kind of, holding your hand as much as I can to take you through these trades. All right, so here's the trade setup. Again, this was one that picked up on my scanner. And then here you can see that cycle reversal is a key thing I look at. We had positive momentum, see how that was pushing up. And then here it was breaking a key Fibonacci level, that 50%. So took the trade right there. See how it held that 50 simple moving average right there. So retracement low. And then boom, had an explosive move to the upside on that one. So this was the trade that we captured with the condor. And so this is what the trade setup looked like. So this was the 29 November series. If you took this long the 230 call, short the 232, call DOE spread. And then the other part of it was short 237.5, 240. So this is what we call a long call condor, which looks like that risk profile. But look at the risk. $82. That's the max risk. So if everything went wrong and you didn't stop out with a break-even stop or adjusted break-even, you would lose 82. But rarely would we'll never ever lose the full at risk. Okay, so then you can see, and then you can see the spread. It's a $2.50 wide spread, less 82, $168, 204% return. That's what you're looking at basically to get. Hey Chris, let me put that in, and that is true, and I've been doing this for a long time. So here's just something one of the somebody just sent out there. Appreciate that. Here, let me see what else. Let me answer these other questions here. Well, how's it perform? Well, the win rate's 79%, and you can see here the losses are low compared to the reward. You're looking at 1.5 to 3 to 4 to 4 to 1. All right. So that's what you're looking at. All right. Yeah, the scanners for TOS, Thinkorswim, and also TradeStation, eSignal. All right, so here's that Apple Condor that did recently. So it went out right there, right in the middle where we wanted it to. So here's our, call spread part of it. So that's what a Condor is. And so you'll learn all this. A lot of members do these trades and they're learning as they go how to do the actual option trade. So the trade then was, when it was set up, Apple was trading at 228.80. When it was taken off on the 29th, it was 235.74. So again, like I said, a lot of members just want the trades. They just buy calls or buy the stock, whatever. But here's the spread that I sent out. Just the 82 bucks was your spread cost, blew out to 249 right there. So this was up 167 bucks, 230% return on that. So you can just get an idea of the low risk that I'm trying to shoot for. Here's another one that we did. This was a long put Condor. So this was a short trade on the Russell 2000. The Russell's been a great one that we do. And so I'll just kind of flip through this one kind of quick. So here it says new IWM short trading at 234.80 cycle high reversal. Okay, so up here reversing down. Target 1, 230, target 2, 228. So here's spread. Buy this vertical 18 November 233, 230 put at around 70 bucks. And then here's on the 15th. Now it's trading at 228.70. All right, so 228.48. So that was the kind of the alert kind of sent out. Now, I'm not giving you, there might have been other parts of the alerts, but these are the two key ones so you can kind of follow. And so here was the short trade set up right there. You can see this. You can see here again, we're up here into this is part of my indicators is the prior week's high. And then we get that reversal right here. And look, see, momentum is starting to fade right here. So momentum, we were looking for this, it was a short-term trade. See it breaking this key support right there. And then we had this gap. So looking at all these little technical parts, and then we had that 21. So we were shooting for this area here and then a potential right to there. All right, so all this homework is done by me, and then you can look at it yourself and verify it if you want, or just a lot of people just take the trades blindly. All right, so then set up this long put Condor here, and ended up here's where it ended up. So it ended up to be a great trade. So here set it up at 234.80, and then here it was taking profit on the 15th. It was trading at 228.48. So the spread we had into this, look at the Condor. Here's your risk, 34 bucks. $34. That's pretty good. So, but look where the spread went. It went up to 174, 174. So this ended up $140 per spread. That's a 411% return in one day. Yeah, that was Russell. Now, these are really cool trades, and this is another part of the service that you'll get. These are what we call our lotto ticket trades, okay? And so these are going to be ones that we typically would do what we call a pinning trade, and typically using a butterfly. These can perform and give you huge returns, okay? So that's why we call it lotto trades. So super low risk, but potential for high return. Here's one that we did on Tesla. This one, I'm just still amazed by this trade. Alert 20 should be working. Hold on. Let me just make sure. Okay, so use that link there. A lot of times it's pilot error, and let me just double check for you. Hold on. So put in that link. Let me put that in for you. Hold on there. Let me put that in and make sure it should be, I just used it. So hold on here. So I'm going to put it in here, right here. I'm going to put this in. So you'll see I'm going to put it right here. PowerCycleTrading.com/special. Plug that in. All right. So then come down here. Okay. All right, just put that in. Now come down here, buy. Let me make sure. Now make sure you use small cap alert, ALERT 20. Hit apply. 552. So try it again. If you still have problems, let me know. You can yeah, Mike, if you still have any problems, let me know and we'll get you fixed up. You can send an email to support@powercycletrading.com if you don't have any issues, but that it should, I mean, it's working on my end, and it's, a lot of times you get something off, it's what I call pilot error. I do it all the time. All right, so there you go. Just make sure you do that. And again, once you're, buy it, then you can get anything else on my website for 64 bucks. So here's the really cool trade. This was one that we did. This was actually back in February, but I just want to show it to you. It says, this is the stuff that you'll get. So it says, new Tesla long binary monthly butterfly option pinning setup. Binary meaning you put the trade on and you leave it. You either win or you lose, okay? But look, this is why you win or you lose. Set this trade up as a butterfly, the 197.5, 200, 202.5, but at the price of $12. See that? 12 bucks. That was the risk. $12 per spread. So if you did one spread, 12 bucks. If you did 10, 120 bucks. But look at the potential reward. So you'll see that now. Here it was on the 8th. Here it is going out at expiration, the 16th. Here it was in the morning. It says Tesla long binary monthly butterfly pinning trade, trading at $200. When we set this trade up, it was trading at 189.35 now and hit our target. Butterfly going out around $215 per spread. That's a return of 1,091%. Okay, so this thing was up $215 at that point. Cost of the trade is 12 bucks. That's 1,800% return. Here it was at going into the close. I said, wow, almost a perfect pin. Actually, it was a perfect pin. So it was going out exactly at 200. So now it was going out up $230 per spread. That was a return of 1,916%. Okay, so that is why we call it a lotto ticket. So these are things that can help the old equity curve, right? So these are what I'm looking for. So here was the trade setup right here, if I get my pointer to work. So you can see where not Apple, but Tesla's, Tesla's a great one right here, stock reversal. And so we were targeting this kind of fib level here and a lot of option activity. So this is our target, and that's exactly where it went out. And then here's what it looked like going out. Now, when we do the trades, I mean, I'll send out, take some profit here, take some profit, but then leave some, for the expiration. Don't take the whole trade on for the expiration because, anything can happen. So we kind of scale out. But this one was beautiful. So you can see here it was the trade at 189.35. So this was the trade setup that I sent out, 16 Feb, 197.5, 200, 202.5 call butterfly like that. Look at the cost, 12 cents debit cost. That's $12 per option spread. One option spread's at 100, equivalent to 100 shares. Spread with $2.50, 250 bucks plus 12 your cost. Potential to make $238 if it pins, a 1,983% return, and it did pin there. So, these are some amazing trades that we're, getting into. And then here's where it went out. That's what I call the top of the tent right there. So it went out at 200. So it went from 12 to 250. So 238 bucks, 1,803%. Okay, so that was one of the best ever that I've ever seen. Was the best ever. But here's another one that we did not long ago. on GLD. This was another lotto trade using GLD. This turned out pretty good as well. So GLD was trading here on the 8th of August, 222.85, and this was a trade that we were looking for a pin up to 230. All right, so it actually did, didn't quite perfect, but it was trading right there at expiration at 230.47. So this was up, at expiration $203 per spread on a risk of, I think it was 29, so 700% return. So you can see here it says the original trade. It says again, new long GLD binary called Butterfly. When we originally set this up, we were targeting 225, but then adjusted the trade up for 230. So you can see here, adjusted the trade up. If I'm not going to go through this all, but see, we adjusted 230. And so I'll show you the profile in a minute, but here it is on the 16th. You can see just down here it says GLD 16 August Butterfly trade around 230.50, right? Looking good for a 230 pin, currently up around $200 per spread or 689% return. Okay, so that was GLD, and then here's what that looked like going out. So here's where we set it up. On the 8th, 222.85 right here, cycle reversal, momentum starting to shift up, bought it here, got out there, and so now it's trading on the 16th expiration date, 230.47, up $203, 700% return, on that. And this was the long call Butterfly that was set up. This was doing the 227 at 230, 230, 233, $3 wide, 300 bucks, 29 cents or $29, potential to make 271 or a 934% return. Now, ended up making a 700% return, so not bad on that trade. So was going out right here, right there. So this was on the 16th, it was going out 230.47. So it went from 29 cents or $29 to 232. So $203 per spread, 700% return. So that was a GLD Butterfly. And then here's just one more type of service that you'll get plus earnings. I sent out earnings trades too. Now this was a breakout trade setup that we did, and these are either breakout or credit spreads, et cetera. So this was kind of one of the first services I started back in 2019. But we have a lot of other different trades, calendar diagonals, et cetera. So so what you're going to get is a combination of all these, and then it depends on what is the best trade strategy that I should use, option for that types of trade. And so I'll show you a couple examples here. So we've had 172 of these trades, 125 winners, 6 break even, 41 losers, 76% win rate on these trades that have been sent out, debit spreads and credit spreads. Here's one that we did. This was a short on the Russell. This is a really quick kind of in and out. So we did this with a put debit spread. So entered this on the 12th of December. Russell was traded at 234.65. And then you can see this was a real quick momentum breakdown trade, took it off the next day, trading here at 232.40. So you can see here it says new IWM short trading at 234.65, daily cycle high reversal and breaking below 21 EMA, daily negative momentum, downside momentum cross target 1, 233, target 2, 231, by vertical 13Ds, 235, 232, put debit spread around 90 bucks. And then here it was on the 13th, trading at 232.40, moving to target 2, 232, currently up $135 or 150% return. Here's another update, IWM trading at 232.70. Make sure to close trade out today prior to the close, currently up $134 a spread, 148% return. All right, so constantly just try to update you, give you the best information. So here was the trade breakdown. So it was trading right here. You can see we had really negative momentum on the 4-hour. So here it was. Here's a momentum reversal, breaking that 21, jumped into the trade right there, targeting here. Boom. So that was the trade setup, just what the charts were looking at that I was looking at. And then here's the trade that we did. Here's kind of the risk profile. This was a 235, 232 put debit spread, max risk 90 bucks. So if you're wrong and you didn't break stop out, well, I'll always give a stop out, so you're not going to lose 90 bucks. And so spread width $300, potential make 210, 233% return. We got out, didn't quite max that, but we got out with a good return. And you can see here, that's where we ended up, the exit was right about there. So it was trading from 234.65 to 232.40. Spread went from 90 bucks to 226, so up $136, 151% return. All right, so just kind of wanted to give you a few, really good examples. So if you'd like to learn more how to zero in on the very best trades in 2025 and avoid having to, use your precious time and capital and energy trapped inside losing trades, here's a really good opportunity for everybody here. I hope you will take advantage of it. And again, use this link here. Let me give you that link again. This should be the one. Yeah, powercycletrading.com/special, and then use that promo code again, small cap alert 20, and that'll get you done. And then I will see you in the trading room. So again, what you're going to get here is 6 months to the alert service plus 6 months to the Power Cycle Trading Club. And with this, let me just go through everything you're going to get, so you're totally in sync. So again, if you've been looking for more help and guidance in your trading, then this is the package for you. So you're going to get my 5 trading alerts services. So it might be that I'm going to send out a butterfly or a long condor. It might be a calendar or a calendar diagonal that I send out, or it might be a butterfly pin, which could also maybe be a calendar, or it could be a breakout reversal, trade, debit spread, or credit spread, or we do earnings, selective earnings. So 5 different types of trades that could be sent out. So get this all 5 of them for the next 6 months. You can start and stop when you want, so you don't use up your time. Plus 6 months to my trading club, you get that. And you're going to get it today if you use that promo code for 590 bucks, which if you break it down, that's just around $3 a day, okay, for the alerts for the next 6 months. So that's what you're going to get there. And then here's what you're going to get. So you're basically tapping into my, 44 decades of proprietary trading service and that I use, and my all my research that I put a lot of effort into these trades to come up with the good trades for everybody. And then I match the trade idea with the best option strategy, for the highest return and the best, theta. I look at all these different things for the lowest risk. Then I outline the trade setup, step by step for you if you want to take my option trade, or you just do your own thing. I'll give you the strike price, if we're going to use puts or calls, the option duration, what series to use, stop loss levels. And then I monitor the trades throughout the day, so you don't have to be staring at your screen. I'll send out the alert. You'll get on your text, or your phone, so you'll be aware and ready. And then can also do email if you want. And so, or again, you're going to get 20% off if you use that alert 20. And so, just a summary again of everything, so it's all nice and clear. Get all 5 alerts next 6 months. So it could be, all the different ones that I just showed you here outlined. When I send out the alert, again, I'll send you a trading guide, for the alert. And then at the end of the day, I'll do a trade setup video review of that, why I did the alert, why I did that trade, what we're looking at there, the trades that are listed in archives, so you can go back and look at them. And then as part of your 6-month membership that you get to the Power Cycle Trading Club, then you get access. I do a weekly live Q&A every week, so you'll have that for the next 6 months. Do a video newsletter update every day after the close. You'll have that for the next 6 months. But here's the big thing. You'll have access to my trading room, my virtual trading room, for the next 6 months. So this is open from first hour of the morning. So you come in if you have any trades that are, you need help with, or see what we're doing, etc. So you have access to that for the next 6 months, every day during the week. And then 60% discounts. Now, if you sign up now until my Christmas special over, you're going to get 64% discount. Okay, so when you sign up, after you get signed up here today, we will send you your members code, and then we'll send you another discount, so you get another 4% off. But if all during the 6 months period, you can get anything you want on the website for 60% off as a nice a bonus there. Okay, so a lot of good stuff there. Now, it's like, basically it's like you're going to have your own research department and me as your trading mentor, at this, fraction of the price, $3.06 a day. So no more having to comb through thousands of charts or indexes, no more debilitating confusion over, what option strategy should I use? I'm going to lay it out for you, or then you do whatever you want. No more agonizing over the best time frames to set up. So it's all done for you, one and done. So here's a little feedback. Here was one of my members, Dan. He said, "You're very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. I paid for my subscription." Here again is a lot of members do this. So he paid for a subscription with the first 4 trades he took when I was, learning how to trade options. So please feel free to share this with other participants if you wish. And then here was Scott. He said, "It'll be the best investment that you will ever make. Go with the elite package, great group of traders." So just, a little bit of input there. Yeah, you can do that today. Yes, Rich. Yes, it is. All right, so that's a look there. Just another summary here. You can see winning rate, 79% win rate overall from May through December. And here's everything you'll get. So, when I send out the trade, I will give you a suggested option trade. Again, let me just, reiterate that, again, a lot of the members just want the trade, and then they just do their own thing. So they may buy calls or puts, whatever. But when I will always give an option spread, okay? Because I want to keep risk super low, and also you can learn. And so I'll give you the trade entry level. I'll give you the profit targets, and this is based on what I call my unusual option activity that I look at. Fibonacci levels, moving averages, so what I call this my price target mapping. I'll tell you what option series to use, stop loss level guidelines. I'm constantly updating these if we need to be adjusted. Trades are listed and archived, so I'm trying to give you as much detail as I can. Trade setup video review at the end of the day. You get the access to my newsletter for the next 6 months, video newsletter every day after the close. You have, we do a weekly Q&A, live and recorded every week, so you have access to that. A big plus, the virtual trading room. So this is open during the week from 9:30 to 10:30 Eastern every day during the week. So if you have a trade that you need help on, or if you want a trading idea, or you want any input, you can come into the trade room, ask any questions you want. Discount of 60% off. If you do sign up right now, though, you're going to get even more, 64%. Traders Educational Vault for you. And then with the Trading Club, this is an additional bonus. You get this for the next 6 months as well with the alerts. And again, remember, you can start and stop when you want if you need to, take some time off, vacation, so you're not going to eat into your 6 months. So with the Trading Club, you get my virtual trading room access every day during the week, 9:30, 10:30 Eastern, daily video newsletter update, trades are archived. We do the Q&A, educational vault, good stuff there. Discounts of 60% right now. You're going to get 64% off if you want to take advantage of that. And then you can see here it says, Mike said, join your last year after making a bad decision, trying other services. You have been best at explaining and teaching various aspects of trading. Thanks a great deal. All right, trading room experience is awesome. You cannot get it anywhere. So just nice feedback from a couple of members there. And then that's pretty much it again. So just make sure everybody, has all the stuff you need here, and I look forward to working with you. So use that link one more time, and any questions, let me know. If not, we'll call her a day. Any questions right now?